Welcome back. Time for the Word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee, strategy founder, Michael Lee, and Payne Capital Management president, Ryan Payne. Great to see you gentlemen on set in person. Good to see you.
It should be.
Ryan, let me kick this off with you. We got a rally underway this morning, something that you've been calling for a long time. Third quarter earnings kicking off this week. Big week of economic data. Dow Industrials going into it, up 150 points right now. We got the PPI out this morning. It's expected to be up 0.2% month over month and up 8.4% year over year. We are also looking ahead to the Fed minutes. That's out at 2 p.m. Eastern. But I think the earnings news is probably going to be the biggest mover of markets overall. Your thoughts on what to expect?
Yeah, I think number one, I mean, inflation's been persistently stubborn here, right? We just keep waiting for it to come down, and it's not really feeding its way through the system yet. So I think that number will probably stay higher than we'd like. But I'm with you. I think it's all about earnings. And the one thing I mentioned about earnings right now is, margins have stayed pretty tight, or they've stayed pretty strong throughout this whole cycle of higher inflation. So that says to me that earnings are probably going to continue to be pretty good here because, companies have already come down. They've lowered their forecasts. They love to play that game of, lowering their forecast too much so they can beat on earnings. So I think it's going to be a very, very good earnings season. And I do think real inflation on the ground floor is still coming down. It's not showing the numbers yet. This is not a horrible combination. This economy is not as horrible as everyone's telling you, Maria.
Well, it's going to be the guidance, right, that is going to really be the mover of stocks. And we're waiting to see an impact on jobs from all of the slowdown that we're looking at. Intel is planning to cut thousands of jobs, Mike. The demand for the personal computer processors, the company's main business, is declining. Intel, a mover this morning. What is your take on this Intel news that they're going to cut thousands of jobs?
So the Fed set out to crush demand to quell inflation, and you're starting to see that now. You had a report from the New York Fed yesterday, consumer demand falling off a cliff. We had AMD last week missing revenue by $1 billion. Substantial number, and now we're seeing this jobs cuts from Intel, and this could be up to 20,000 people out of 120,000 person workforce. So almost 15% of their entire staff they're going to get rid of. This is substantial. So the Fed is going to keep going until something breaks, whether it's a systemically important financial institution, market sees up, or job market, or inflation. One of these things has to break for the Fed to pivot. We're starting to see in the labor market. I don't want to say this is good news, but I believe this has been a long time coming. So as this labor market continues to weaken, we can only hope that we get a pivot from the Fed, which I believe is what's necessary for markets to recover and stabilize.
And I feel like Lyle Brainard's comments yesterday was sort of suggesting, I know she wants the stimulus and is a real dove on this, but did you read anything out of those comments that she made yesterday about that?
With what's going on in the United Kingdom with their pension fund, you can start to see certain systemic assets. So the gilt going from 3.8% to 5% in a day, you're starting to see things break. And so I believe Jeff Gundlach has the right idea here, and that these rate hikes were almost at the end there, and that the focus should be the balance sheet.
Wow, we'll see. Yeah.
Well, I would just
agree
mention,
with that?
Well, I think you have to mention this too. You mentioned unemployment, which has been freaking, they can't get the unemployment number up. If they do, if you look at markets historically, the market recovers way before unemployment starts to go up. So I think the big mistake investors are going to make right now is let's wait for some good news. Let's just wait on the sidelines, because the market's going to rally way ahead of any good economic data. And I think that's what you have to focus on right now. Is the S&P trades at 15 times forward earnings, which just means it's historically pretty average. Get in now. Don't wait for the good news, because once the good news happens, market's already higher. You're going to be like, I wish I listened to Ryan Payne.
Did you see PepsiCo raising guidance? That was one that's actually raising guidance. The stock is up. That's really going to be the mover of this market if we see good news coming out of this guidance.
100%. And any company that has pricing power with inflation, and Pepsi is a perfect example of that. Tech is not a great place to be in a rising interest rate environment. We have higher inflation, but there's plenty of places out there. Consumer staple is a great example that do really well in this type of environment. You have to have them in your portfolio.
Yeah, but you can't ignore some of these dire predictions out there. Look, Jamie Dimon says we're going to be in recession within 6 months. He says the stock market's going to drop another 20% from here.
Yeah, so what I'd have to say for investors, like Ryan just pointed out, that the market will bottom ahead of the economy getting better. So if you think March 2009 is when we bottomed, unemployment peaked in April of 2010. So I think there is some carnage and some damage out there that's coming. I think things are holding on by a thread in various markets across the world. This dollar strength is debilitating to a lot of the other economies in the world. And the one thing Joe Biden did say that's correct is we are in a much better situation than most other places. And unfortunately, that could end up breaking a lot of things. And so as that's happening, I'm looking for the notion that the Fed is going to kind of change their tune. I think the market pivots there, and the market is 12 to 18 months ahead of the overall economy.
Yeah.
So I think some of these dire predictions could come true, but it depends on how they manage them.
Okay, we'll see. Ryan, great to see you.
Thanks, Maria.
Thank you so much, Ryan Payne. Michael Lee, you're sticking with us all morning. We were grateful for that. Quick break, and then defending